Hi, this is Hamid Kohan. Welcome back. I'm here with Nav Capital talking about the finances of a law firm, which is very important. Hi, this is Hamid Kohan. I'm President and CEO of LegalSoft. I'm happy to have a great guest here today, Nav from Nav Capital, who is going to be exploring the importance of the financials and accounting and understanding your numbers within your law practice. Welcome to LegalSoft podcast.
Thanks for having me, Hamid. It's a pleasure to be on. I'm excited.
Wonderful. So we will please give us a little bit of a background about your organizations, what you do, and especially more focus on what you do for the law firms, because I know you're working with a lot of the law firms and you help them structure, do all the finances, accounting, understanding the numbers and so forth. And you're helping them to scale and grow their practice, which it wasn't a big thing before, but is a major thing now because with all the cost controls and understanding your cash flow and so forth, it either blocks them from expanding or it helps them expand.
Sure, I'm happy to. I founded Nav Capital Consulting about 6 or 7 years ago now. Time flies.
Yeah.
Prior to starting the company, I spent about a decade at the Big Four accounting for one of the Big Four accounting firms. Served mostly Fortune 100 companies, mostly in the asset management space, and some higher private companies. And very quickly after years where kind of the growth for me subsided a little bit, I found the need that I kind of wanted to add value to a different set and really kind of the small and middle market space. And I learned a ton of great things in like the Big Four. But what I wanted to do was take some of those things that these big companies are doing and help some of the middle market and small business space do apply some of those things so they could scale and grow. And thankfully in the last few years, I feel like it's been really good, and most importantly really rewarding to work with such incredible entrepreneurs. And look forward to the next 7 years and seeing where it goes. And so kind of that's what we're about. We're a full-blown accounting and finance firm dedicated to mostly service-based businesses, and with a specific niche in the legal space. And so,
So when you come into a law practice, either doesn't matter if it's a startup or established and so forth, what is the first few things that you do to understand where they are with their finance and accounting? Because I'm sure you're going to find a lot of areas that are not properly set up or
thing I would do is first ask for a set of financials. And it's, believe it or not, I think the answer to that really opens up a lot of a lot of worms in an organization, for better or for worse. I think the priorities aren't there, especially if I'll give you an example. I just went through an onboarding call just yesterday, and I asked for a set of financials, and what I got was a set of financials, but it was outdated about 11 months.
right.
And so I'm trying to sit here and figure out what's going on. And it seems to be that for the most part, unfortunately, most organizations are just preparing financials for the sake of filing a tax return.
Right.
They're not sitting here and getting themselves updated on their figures, in my opinion. And the way we operate is on a monthly basis at the minimum, so that they can, make certain decisions and be more forward looking in their decision making and utilizing concrete numbers to be there. So that's the first thing I ask: financials. Oftentimes it leads to the conversation of, hey, let us help you get your financials in order and make sure you have proper bookkeeping in place.
Is the first biggest mistake that when I do the consulting part and I work with the law firm and so forth, I ask sort of the same thing. I ask for the org chart so I find out who's here doing what, which is 99% they don't have one. They just say, these people here are case managers and these people here are paralegals and so forth. There's no org chart. And the second thing is finances, because I cannot help them if I don't know where what's the money coming in, what's going out, and what's left over or anything like that. So they refer me to exactly what you said. We have this invisible person somewhere that basically prepares our taxes, which is doesn't do me any good because I'm not paying the taxes. I have no control over it from last year anyway. And so basically they don't have it, which is makes my job is like 10 times more difficult because I'm driving blind. I have no idea what the money is coming or going. get somebody who does your real time financial planning and organizing and accounting, not from last year. And that's where we usually start. And when I get some numbers, I get people like yourself who get engaged now. It takes them a little while to get the numbers together, and then I can advise them based on that. So I'm sure you go through that process. Usually, how long does it take from the onboarding call that you mentioned to be able to have the meaningful numbers that are real time? What's his typical process or time frame?
Yeah, well, it first depends on what's happened. In this example, we'll take this one example. It was 11 months since they've done a proper reconciliation and closed their books. And so, we're looking at doing 11 months worth of bookkeeping. And depending on how big the organization, the number of transactions, that could take it'll we'd have to separate out and just strictly focus on this one client, and at the minimum spend 30, 40 hours to go there and just reconcile the transaction. And then depending on where it's at, depending on the transactions, it could take longer. So it really depends. I've had some horror stories where I've had to go back 3, 4 years, because for my law firms, uh, there are certain requirements that are needed to maintain records of, of bookkeeping, and it's 5 years. You need to maintain 5 years of bookkeeping. And so we've had exercises where we had to go back 5 years. Those were fun and took quite a bit of time. Um, so it really depends. But to your point, I think really what's really important is from the onset building that foundation, because the more you go beyond it and the more you not focus on it, the harder it's going to be to go back. And the more someone like myself, a CPA or another accountant, is going to probably be very upset with you, because they're going to have to go back and spend countless amount of time.
Right. What drives me crazy now is the highest cause of attorneys losing their license or getting on probation and so forth is mismanaging the trust fund, the trust account, right? And they think it's easy, simple, and then they pass it on to somebody who doesn't know anything about this stuff, and they're depositing the wrong check into the wrong account, they're drawing from the wrong account, and then they need to reverse it and all of that. And having known that this can get them disbarred, they don't put enough value or resources into it to make sure this doesn't happen. They just think magically it happens. Have you had any experience with
For
that?
any of our law firms, we have an onboarding process, and this process, first we acknowledge whether or not, because not all lawyers have a trust account, that they don't necessarily need one in their operation, right? Most personal injury attorneys and other attorneys who are collecting funds on behalf of clients.
Yeah, contingency fee client, contingency practices, employment, workers' comp, uh, personal injury, and those folks.
And yeah, absolutely. And so, to the extent there is an IOLTA account, like you said, there have been some bad actors in this space, uh, without naming any names, but everyone knows the names. But for better or for worse, they triggered in our space a very, very heightened oversight from our regulatory bodies. So to be more specific, I think the conclusion was there was a bad actor that embezzled about $15 million of trust funds that belonged to clients. And as a result, the California State Bar empowered a new task force called CTAP. And so basically, they're responsible for essentially overseeing all the trust accounts for California's lawyers. And so things have changed. And since then, most lawyers, the only additional focus they may have seen is every February when they go in and they renew their license, they check the box on certain things, but they probably don't know what they're checking the box.
Right.
And some of these things are those specific requirements you need to maintain as you're holding a trust account.
Right.
You have to maintain canceled checks along with a plethora of additional things. In our process, we kind of have a onboarding process where we go through an internal checklist that we've built based on the bar. And for your audience, whoever needs something, our checklist, we're happy to share it with them. But we go through that checklist and we ensure that everything is on par. And if there's something missing, we work with the client to either internally develop it or help them develop it by our firm.
Now, on the next level of things is the stuff that when we evaluate the law practice to see how we can help them grow and scale and so forth, when we're getting into the financials, especially contingency firms like employment or personal injury. Question is like, what's your cost of client acquisition? I haven't found one single law firm who was able to give me an answer. It's basically I say, how much you pay for your raw goods, and they have no idea. Imagine in any other kind of a market, if they didn't know how much is the cost of goods,
Right.
which is in this case is the cost of client acquisition,
Right.
and their guess is so wrong. It is not even in the near numbers. The cost of client acquisition in PI in California is about $2,400, and they're guessing at 600.
Yeah.
It's so off.
Right.
So that's one of the first things that I trigger it to get some financial help, get some accountant, somebody to figure this out. You spend this much money and you get this many cases. So what's your cost of client acquisition? So these are some of the places where I always refer the firms to you guys to say, figure out what they're expending. I said, what's your cost of labor? What's your cost of overhead? What's your division of the cost of the labor per case? Because they know the case comes in, it takes a year to handle it, and the 3 people were involved in it. They can pretty much, like what you do, is figure out what is the average cost of the resources distributed to the number of cases. And they don't know any of these numbers. They don't even know their advertising budget. Sometimes I ask them and says, I think we spend, I don't know, $20,000-$40,000 a month. Just like asking you what's your car payment. You say, I don't know, between 600 to 2,000. Well, you wouldn't give me that answer. You would know exactly I'm paying $645 a month for my lease. But they don't know how much they're paying for all these advertisements and all these marketing fees.
Right. And in my mind, I mean, this is across the board. So I see that all the time. And we help organizations build out those KPIs. And just for your reference, those KPIs, to the extent relevant to each organization, we have them on our management reports, and we deliver them to our clients, and they're always very familiar with what they're certain, like the handful of KPIs you mentioned. We can build out, show that, but it really all comes down to first having that foundation.
Right.
And if you don't have that foundation, it's very difficult to even get those figures you're looking for. And by the foundation is just a basic set of financials, right? Unfortunately, our industry lacks the financial expertise to even interpret a set of financials, believe it or not. Right. Our office spends countless amount of hours building them, and I'm pretty confident that a lot of the times, most of the time, these reports aren't even being overlooked as much with the owners. The benefit of that is they rely on our office to do some of that analysis and help them with that, and that's fine. But at the minimum, what I'd love to accomplish, if not anything else in this podcast, is maybe we can empower some of our lawyers to really understand how a set of financial statements are read, because it really goes down to that, building that foundation. And then in terms of the nitty gritty, the sub ledgers you want to build out for cost of client acquisition or anything is just a subset of a handful of those line items, right? So
I'm glad you mentioned that, because what happens is that, again, when with these practices, when they get the financials, they get the P&L and they get the ledgers and all this stuff, they just take it and sort of put it away or say, okay, my taxes are being done. Nobody goes over it with them and points out things and says, did you know your advertising cost has gone up 46%, or your labor cost has gone up 2x? So they don't go over it and review it so they can get some action plan out of it. The whole reporting of the financials is one, to understand what you've done, then get some ideas how to reduce costs or increase profitability. Absolutely. But if you don't go over line by line, it just becomes a piece of paper, like somebody just mailed it to you and you're just like, okay, well, I don't know what it means. And they need to understand that we need to go through it. It's just like almost somebody give them a litigation case that they never opened the folder. How are you going to go to court with a case that you didn't even open?
right.
Right? So the financials, when you're handing it to them, you gotta say, okay, let's sit down, set up some time so I can explain what's going on in your financials. And I'm sure that's a rare occasion that actually somebody's asking you. I know you're enforcing it, but them actually being requesting it, yeah, not happening.
Yeah, try to help the client. We understand lawyers are freaking busy. I mean, so they're busy doing their craft, and just how every entrepreneur, it's really usually, unfortunately, the last priority for them to review their numbers and help them make best decisions. But oftentimes those best decisions are made while acknowledging the figures under there. And so you're absolutely right. I see it all the time. What we try to do to help and continue to educate, we have monthly meetings that we hold in place, and then in addition, to the extent whenever we send out our monthly deliverables, when we see those outliers, we'll point them out. Hey, you had a 46% increase in your marketing budget. Are you sure you're on top of things? Is everything going well? What's the ROI on this additional spend? We'll ask these questions, leading to an additional dialogue, and ultimately we arrive at where the appropriate trajectory should be for the business. And so all that's there. But yeah, I think for the most part, again, build out that foundation is my perspective, and then utilize these figures, learn how to utilize these figures to make these very critical decisions.
I always tell them, I said that when you get into this evaluations that I do, I said practice tune-ups and so forth that we do at legal soft. When we look at the numbers, it's a completely different thing than the managing attorney or owner tells us about it. And now that is the practicing of law becoming a smaller portion of actually having a law firm, because a lot of it has to being a business. But how can you run a business that you don't know the finances of? And now it's getting more and more important to be able to have a very tight control over your finances, and you're in that business to make money. But if you don't know your numbers, how you expect to sort of the money happens?
Right.
You don't have control over expenses, over the cost, over the recovered fees or anything like that. One of the big thing comes into the picture is not a lot of firms referring cases to each other, right? So they have referral arrangements, referral fees, and so forth. Um, they have no calculation of it, no tracking of it, because it's a revenue source. So I'm doing 5 million through my own firm, and I'm doing a 2 million, million and a half through referral fees that I'm receiving, and another half a million that I'm actually paying out. Is a business. So again, not a single one been able to answer any of my questions. And says, how much a year do you get in referral fees? I have no idea. Or how much are you paying out in referral fees? I have no idea. And they can't even point me to somebody who knows. So sometimes you don't know. You send it to your marketing person and they have the answer, or you send it to your finance accounting person, but they haven't set up the foundation, like you said, categorizing that this is outbound referral, this is inbound referral fees. So they offset each other, and this is what my net income is from referrals. They haven't paid any attention to it. So that's always been another weakness when I'm dealing with the law firm's financials.
I hear you loud and clear. I think again, goes back to the foundation, and then we can't enforce it enough. Making sure you have it, and then being able to make some tweaks. To the solution there. For my clients, to the extent that if someone like yourself wants to come in and help consult uh, with uh, with one of my clients, and to the extent we don't have a disaggregation between revenue coming from different sources, with a click of a button, we can utilize your software, implement that disaggregation, and you have exactly where everything is going. So again, once the foundation is there, there are so many things that could be done, manipulated, so that you can make those really sound decisions. Because it sounds like where we're going right now in this space is things are ever changing, right? It seems like for the most part, like you said, a lot of folks are referring cases, and maybe for the most part, a lot of folks are entrepreneurs are saying, it may not be worth it for me to go in and take on this case because of my overhead associated with this case. It may or may not. It really depends on the organization and how it's structured and how that is, right? And so, once you have those numbers, you could see the proof in the pudding. You can make that decision as, hey, Joe Schmo, if you're going to end up giving me 40% for this, I'd rather not do this in-house and end up making probably less money anyway. These are all very important business decisions, and with successful business, it's more than just the money, it's the time,
Right.
right? They're making that decision, and with the figures in front of them, they could easily make that decision and say to themselves, hey, not only will I make more money, but I'll have more time to do things that are more meaningful.
At one time I had a opportunity to do a complete financial evaluation of a firm with 3,000 cases that has been settled. And I did a whole P&L analysis with the help of accounting and so forth. And we came to conclusion that the profitability of the firm on pre-litigation of these 3,000 cases was about 24% net profits. Okay. And but the owner thought is making like 60% or something, but the actual was like 24. And as soon as we saw that and we evaluated and we proved the concept, the firm completely changed from operating to refer out because they're getting 40-50% refer out without doing anything. So say if I'm doing all of this work with all of this headache and I'm making 24%, I'm just going to give it to John and get 40%.
Makes sense. He's doubling his margin and he's not doing anything.
Anything, exactly. So that's why there's a huge trend in the industry about referring out, because the profit share is not where it used to be, especially when they don't have those big wins of 7-8 figure cases coming in as easily as they used to, and they have to deal with a lot of low value cases, and they don't understand the cost of labor has gone up triple. That's why our business of providing virtual staffing has gone through the roof, because the labor costs gone through the roof. Not only you can't find them, when you find them, it's very expensive and it's hard to keep. So that's what the virtual staffing has gone really well for us because we're replacing that.
Totally. And I mean, I've seen that within my clients. And so I've already seen the benefits of that. So it's definitely, to anybody who's not using virtual staffing, I think are automatically at a disadvantage, especially if they're looking to improve their margins.
Have you set up any kind of a training system, training curriculum for folks who are interested, like the attorneys who basically either started out recently or started out a few years ago, but they don't have the foundation that you're always talking about and the structure and the applications and so forth? Is there anything that you can offer them to get them started? Because I'm sure a lot of people watching this thing, they don't have that foundation you're talking about. And even they might think they have, but they really don't. Not like what you're describing it to be. So how do they get started?
So, as I was saying, in terms of training, our subscription offers that kind of learning, right? Because it's a continuous dialogue between our office and the business owner or the person managing the finances of the law firm. And so, by the time you have a few months in with us, you're pretty well versed in what's happening and what needs to happen and what we're doing and kind of that stuff. I don't know if that answers your question, but
So it's more like a turnkey solution for the law firm finances and accounting, right? So they learn how to, you set it up for them, you teach them how to review the report, make, create feedbacks to it, and teach them how to scale and grow using the financials.
correct. What numbers they should be looking after. We give certain commentary utilizing benchmarks that we see in similar organizations that may be an outlier that they may want to focus deeper on. There is no, and I'll tell you, thankfully we've had such successful practices, some not as successful. We've seen it all, but I don't think there's any organization that's perfect. There's always work to be done, and that's the beauty of business. You go to work, you wake up every day and like, what can I improve? There's no perfect business, and you could see some of that in the numbers. You could see an organization killing it in the gross attorney's fees, but in terms of their margin could be next to nothing relative to another organization that could have an average attorney fee figure, but their margins are incredible.
Right.
So there's just so many different things that could happen, that could be happening, that the numbers reveal within an organization. And so we try to, for our subscription, for our clients, educate them and help them understand. And we're doing some of the analysis. Obviously, they're relying on us, but the reality is there's no one better than the business owner to to acknowledge certain things because they're the ones that are in the nitty gritty. At the end of the day, we get the numbers, we reconcile the numbers, we assess the numbers. But unfortunately, I'm not the business owner, and there are certain things that I can't, the intangibles that I can't probably foresee that maybe may or may not make sense with the figures. And so it's always an important dialogue between our organization and them.
Right. And I want to also clarify one more thing because we do help and we do set up law firms from scratch. And the typical issue we find with people starting up the law firms, like you mentioned, not the foundation, they postpone this kind of decisions. Like, I don't need a case management software because I don't have that many cases. I don't need an accountant and a finance person because it's not that many transactions. I don't need social media because you know they delay all of this stuff which should have been done right from the beginning so the foundation grows with the practice, and they keep deferring it out. It's like, no, I don't need somebody to do my intake, I don't need somebody to do my accounting, and then they find themselves in the hole, which is now is so difficult to catch up and clean up and go back and set up all these foundations from accounting to the simple case management software that they don't want to buy because it's $75 a month fee for users fee, right? And they say, we later, and it comes and bites them really hard.
Really hard. And one thing that your audience may or may not know is that that foundation is important from the onset. If you have your own business, if you've decided that you're going to launch your own business, you need to have this service. And I'll say it from the beginning. And the reason being is you may actually be in a position, and I'll give you one of the biggest secrets of my industry, Hamid. One of the biggest secrets of our industry is my recommendation for anybody who wants to improve their processes is to have a CPA who is well versed in the tax code, have oversight in your bookkeeping, and ideally the same person. Why? Because whenever me, as someone who knows the tax code very well, I'm reviewing your books as part of my management analysis, indirectly I'm already thinking about what can I do to help this person save money on taxes. So when I'm looking at the monthly deliverable, you're also getting tax planning out of it, right? Because then I'm able to see what's happening and be forward looking. And with taxes, you have to be forward looking. I can't tell you the amount of times the year ends, right? And then a few months after, potential clients call me. They say, Nav, I had an incredible year. Thank God. I need help. I don't want to pay too much in taxes.
Right.
Well, I'm saying, hey, man, you're kind of SOL because the year ended,
Right.
and we can't do anything anymore. There are a handful of things we could still do, but the ammo that we have to utilize a tax code to be forward looking within the taxable year is, bar none compared to what we can do, after the year ends and we close the books.
Right.
So another reason why when someone is thinking, oh, maybe it's too expensive for me, well, you may be saving a ton of money having a CPA on your side to be overlooking your books on a monthly basis, helping you make those decisions before the close of year, and helping you save a ton of money in taxes and reinvesting in your business, and getting you at an ultimate better place and ultimately save you money. Right. So for me, it's a no-brainer. Foundation. You're an entrepreneur. You're starting your business. Make sure you have your accounting affairs in order and you have someone overseeing.
And it's funny how they consider the cost of it, and they say, "Look, I'm paying this guy's $2,000-3,000 a month," and they look at it like that is expense of 2,000, 1,000, whatever that number is, but they don't realize that how much they were able to save. They don't calculate. Say, I paid 20,000 in the year, but this guy actually helped me save $250,000. They don't relate it like that. They think this is an expense, but they forget about the outcome, which is two decisions or two directions you gave them actually saved them $250,000. But they look at the expense, which is very foolish. And this is sort of a funnest part of the year for me when it comes toward the end of the year, the last 2 weeks of the year. Even though I'm not a CPA, I'm not a financial advisor, nothing like that. From the people, from the firms that I have a closer relationship with, they come and say, Hamid, this is terrible. I have $2 million in my account I need to get rid of. Okay, well, give it to me. If you want to, totally want to get rid of it, just give it to me. But it's like, I cannot afford to pay taxes on this 2 million that we made. We had these huge settlements that came in like 3 or 4 months ago by just sitting in account. Well, we only got 2 weeks. Your case was is already past a year, which is terrible. But these guys in the last 2 weeks, and I do my thing with them, but it is sort of funny to me. There's the last 2 weeks. I basically like last year, I had to help people get rid of like 10, $15 million in the last 2 weeks of it, and I just paid them like to invest here, pay there. But again, I'm not a financial advisor, I'm not a CPA, but I was just more like a mentor or something. I was trying to help them out. But it's funny how they wait till the end or even after the fact and say, shoot, the year is ended. Now I have my tax liabilities going through the roof. But it's because they've never been trained or structured. You know, when somebody goes to law school, this is what I titled my book, How to Scale Your Stupid Law Firm, because, and I have 2 kids in law school, so I know how it is like. They don't train them on anything, you know, anything that is relates to the business, like the accounting, the finance, the HR, the technology, the marketing, you know, infrastructure, none of the stuff. They teach them at the best law. And the law they teach them is federal law anyway. Then they come to the state and try to learn the state law just to pass the bar. So when they go and work in some other law firm, they never get exposed to any business part of it because the firms don't like that. I hired you as an attorney. Here's a bunch of cases. Go work them. So they don't get that training either. Then they go start up their own firm, not knowing anything about the business side, the finance, the marketing, the infrastructure, IT. They don't know how to set up their email, you know. So it's always been a challenge like that. But they need resources like your firm to be able to at least get their financials in order.
Right. No, absolutely. I think it even goes beyond law school. I think curriculum overall in the States, I still don't understand how there are no financial literacy requirements even in high school.
Right. They can't balance the checkbook.
So I think, I think by the time they go to law school, they should even have a baseline of that because they're now professionals, right? So
And your service is honestly not expensive. So the value is definitely there, but they just never been taught to value it properly.
I think part of it is our own industry's fault. Um, most accountants um, have been marketing themselves as tax preparers, and they don't, you know, you know, tax preparation has become and for a long time it's just a commodity. You hire someone, you give them the numbers, they'll file a return for you. So that service may not be as costly, and so when people are coming and trying to get a more proactive service, getting tax planning, getting financial management, all, our fractional CFO service as an example, they're comparing that to someone who they're used to maybe just giving some numbers to and then them filing a form for that. And so when you're comparing that, it's really not apples to apples. And, they get a little bit of sticker shock and then they, take a step back. And it isn't until they really realize and they get to the point like, okay, well, this is becoming very meaningful, or they get hit with a high six-figure tax burden. They're like, okay, I need to do something different.
I need that. No, I need advice. So now it was great to have you here. So could you tell our audience how to find you, where to find you, and offering them your services?
Yeah, first off, I'd like to invite you to my podcast. We have a podcast as well called Overtime with Nav. I'd love for you to join.
Wonderful. We'll love to.
Yeah, we're on major channels on YouTube for our audience wants to, attend. I'd love to have you on, and I speak a lot about accounting and finance, and just have a little fun on it too. You could reach me at my email, nav@navcapitalconsulting.com, and our website, navcapitalconsulting.com, and maybe through you, Hamid. I mean, you and I share a breadth of great clients and such, and look forward to continuing and collaborating together and serving the legal industry.
Absolutely. My pleasure. Thank you for joining us again.